Today's episode is called The Five-Figure Tax Mistake Your Business Could Be Missing Out On. We will be discussing what is the tax credit, what things could qualify your business, and what do you need to do to get the dollars back in your pocket.
Educate your money now.
Hello, and welcome to Educating Your Money podcast. I'm your host, Kristen Curry-Case, owner of Matnick Bookkeeping and Tax Solutions. I hope everyone is staying safe and healthy. Today's episode is called The Five-Figure Tax Mistake Your Business Could Be Missing Out On. We will be discussing what is the tax credit, what things could qualify your business, and what do you need to do to get the dollars back in your pocket. We would like to thank Out and About Business Solutions for sponsoring our podcast. Today's guest is Justin Maxwell, owner of Small Business Incentive Consultants. Justin is a proud husband and father who is passionate about helping the small business owner pay as little in taxes as possible. His company specializes in tax incentives and credits. They use the United States tax incentives to help small business owners recover unnecessarily paid taxes. In the last year, his company has recovered over $1 million in unnecessarily paid tax dollars for the small business owner. Hi, Justin, and thank you for being on the show today.
Hi, Kristen. Thank you for allowing me to be on the show. It's a great opportunity, and I'm thankful for your kindness, and it's great to be here. Thank you.
This is the perfect topic for this time of year, I'm pretty sure, right? We are in full tax season swing, and many business owners are in the need and probably looking for tax credits that could help them pay less in taxes and keep their money in their pockets, because obviously many businesses have been hit during this time. But so many small business owners probably don't even know about all of the tax credits that could be potentially available for them. And we'll be discussing one of those credits today. So Justin, what is an R&D tax credit?
Yeah, that's a great question. I think it's important for me just to take a step back before I answer that and to help us have a perspective of what we are dealing with. So I like to think of the tax code as a list of incentives on how not to pay taxes. A lot of people don't understand that that's pretty much what it is. Only the first chunk of the tax code says this is what you're taxed on, how much, what percentage. But the rest of it, there's thousands of pages on how do I not pay taxes. And one of those ways is to use what is called the Research Development Tax Incentive, which is a credit that the United States government gives qualifying businesses to lower their tax liability. And it's important to know that a credit is a dollar for dollar reduction of your tax liability, while a deduction is only going to be about a 30 cent per dollar lowering of your tax liability. So a credit is a very powerful tax lowering tool, and R&D credit specifically is probably one of the most missed, it is the most missed tax credit on the books by the small business owner. And so it is an extraordinary way to lower your tax liability, and it's just an incentive that the government gives businesses. If you're doing these behaviors, you're going to be able to lower your tax liability. And so that's what it is, and that's how we're going to dive in a little bit more on how it works, but that's simply what it is. It's just an incentive to lower your tax liability.
Yeah, so why does your company concentrate on preferably small business owners?
Yeah, so the reason we specialize in the small business owner is because we feel the small business owner is the economic engine of society. They hire more people than anyone else. Everyone always praises the big boys like Amazon and Microsoft, but they don't hire hardly anyone compared to what the small business owner does. The United States government is set aside for this next year $20 billion for the Research Development Tax Incentive Credit. And about 80%, maybe even up to 85% of that money is going to be claimed by businesses that gross over $1 billion a year. And so you have all of these big players in the United States, which is a very small few, taking all of the credit. And yet the small business owner who qualifies just like Amazon does, who qualifies just like Microsoft does, doesn't have the tax team. They don't have the people in place to realize that I have access to this credit too. And so we saw the need that they can benefit from it too. And so we have chosen to focus on the small business owner because it benefits them more than it does Amazon. It benefits them more than it does Microsoft. And so putting money back in their pockets is what we are all about. And that's what we're here to do, is help put the money in the small business owner's pocket.
Yeah, that's great. And so true, because so many, I mean, most probably don't even know about it. And the reasons why the big boys do know about it is because they have a whole team set aside to find all the credits possible for them to take advantage of.
Yeah, they spend lots of money to get as much money off the tax liability as possible. And the small business owner, a lot of times it's just their friend is their CPA, or they only feel like their CPA is going to be able to know everything. They don't realize that you can have a bigger tax team than just your CPA. And so there's much more to being the taxes than a lot of people realize. And so we're here to be that light and to shine something that can be a real benefit to a lot of small businesses.
Yeah, that's a great service. So what qualifies a business for the tax credit?
Yeah, so it's important for just to take a step back, and before we can dive into that, is to understand why this tax credit came onto the books. The reason it came on the books is because in 1981, the auto industry the United States auto industry specifically had been overtaken by Japan. So Japan was the world leader in the auto industry. They were producing more cars. And so the United States government thought, we want to be on top. Like, we need to be promoting our businesses. We want our businesses being innovative. We want them doing things that are going to be inventing and pushing the not just auto industry, but keeping the business in the United States at the forefront of the world. And so they created this credit to, like, if you're inventing something, if you're creating something new, we'll give you money to help offset the risk in that. Because a lot of times when you do those things, there's a chance it's going to fail. And if it fails, like, you're out all that money. And so the government was like, if you're doing those behaviors, we'll help offset the risk by giving you this credit in return for doing those things. Now, back in 1981, it was very rigid and strict on what qualified for the credit. Now it's much more broad. So it's a much broader definition than just, like, a lot of people, when they think research development, they're thinking lab coats and test tubes, or like creating something new out of scratch. And that is a part of it, but it's much more broad than that. So I like to think of it in terms of words and like synonym words that help people think, like, I do those things. I think I'm qualifying behavior. So if you're doing any improving or creating new products, processes, or systems, if you're doing, like, you're using equipment to increase the efficiency of your business, so you're trying to improve how your business is functioning, so that could be automating processes, that could be having a software that you've created or you've purchased that's helping your business run more smoothly. This could be manufacturing a product, or creating a product, or designing a product and then having it go to production. Or you just, like, let's say this is just a random one. Let's say you're a t-shirt or a clothing maker, and you purchasing the t-shirt from, like, a already created, but then you're putting a logo on it, your logo, your brand, your design. That is part of the process, because you're creating something new. So the creation of new or improving, making things better, like, that is qualifying behaviors. And as you probably are realizing, like, that seems like pretty much any business could qualify. Like, that's what business is doing.
Yeah.
Like, businesses are always trying to improve. They're always trying to make things more efficient. They're always trying and find the best next way to do something. And that's what the credit's for. And so that's why we're here, is because so many businesses qualify for it, and they're not taking advantage of it.
So how many years does the IRS allow for a business to go back and claim these credits?
That's the really cool thing, is a lot of things with tax, you have to be proactive with it, and you have to do it now, and you can't go back in time to fix the issue to lower the tax liability. This is different because it's behavior based. So, like, what you're doing in your business has already happened. You've already qualified for the credit by your behaviors. And so we can actually go back in time and we can prove it, because we have, dive deep into your business behaviors, how it works, what you've been doing, etc. But we can go back and prove it for you. And we go back to all open tax years. So right now, the open tax years are 2017, 18, and 19. And then if you file for 20 already, then you would also have the opportunity to have 20. But you have all open tax years that the IRS allows to be open, is what they call it. And so we go all 4 of those or all 3 of those, depending on the time of year.
And does a business owner, CPA, or accountant need to or have to get involved?
No, they don't. So we don't mind working with CPAs and working with bookkeepers. Like we like that, but we specialize and do what we do in helping them get credit. A CPA is going to be able to help you file your taxes and get the deductions and lower your taxability that way. And so they get to do what they do. And so if they want to join forces with us, that's great, but they're still going to do what they do, and we're still going to do what we do. So they don't have to be involved at all. Actually, if you don't want them to be, or if they don't want to be, they don't even have to talk to us, because we can do everything we need to do without them. But if they want to be communicate with us, that is fabulous, but they don't have to be an integral part of what we're doing, because we're doing something different than what they're doing.
And so you mentioned open tax season. Obviously, we're coming to the close of the 2020 tax season. Are businesses running out of time to try and claim tax credit for, say, if they wanted to go back to 2017?
Yeah, 2017 is closing very rapidly. So if you are a corporation, S Corp or C Corp, it's probably too late unless you're going to file an extension for this, because it's coming up March 15th here. So it's probably too late to recover 2017 if you're one of those. If you are not a corporation, we still have until April to do that. But that's coming up very quickly, and we'd have to for us to do it. It takes about a month to get the whole process work of all the work that we have to do, because we're amending so many different years of taxes. So you'd have to get it to us pretty quickly if you want 2017. And again, that is only if you're not filing an extension. Extension keeps that window open longer. But if you're sticking to the deadlines already in place, then those windows are shutting very quickly.
Okay. And if a business feels they may be a candidate and they're interested in trying to at least determine if they qualify for the tax credit, and they contact your firm, what is the process that they would need to go through?
Yeah, excellent question. So the process is very simple. We do a free analysis. We call it an incentive analysis, just because not every business does qualify. Like you have to have lots of behaviors, and you have to have a pretty good chunk of expenses to go with it. And so if you don't have enough behaviors, you're not going to qualify. But we offer a free evaluation, because you don't know, like that list that I just provided you of all those things that could be qualifying, it's so broad, like you might not know. And so it's best to find out, because if you have money to IRS, there's no reason the IRS should have it. Like it should be in your pocket. And so we do a free analysis to see, does your business qualify, yes or no? It takes us about a week or two to evaluate the process. At the end of the week, we're going to give you an answer. Your business qualifies, or your business does not qualify. If you don't qualify, now you can know, at least right now, we don't qualify, which gives you the assurance I did not overpay my taxes. But if you found that you qualified, now we can have a conversation like, how can we help you get that money back? What's the process for doing it? And that process is you signing an agreement with us to give us permission to amend your taxes. We amend your taxes, and we have you sign it. We get the IRS, and the IRS is going to send you all that unnecessarily paid taxes and give it back to you. So it's a long process. I don't want to make people think this happens like lickety split. So for us to amend the taxes, it's about a week or two, which is quick. But once it goes to the IRS is not efficient with their ability to get things back to people. And so the typical timeline is 2 to 6 months to get a check back. With COVID, that has become slower. We've had it still be in the 2 to 6 month time frame, but we've had some people extend it into like 8 months, 9 months before they're getting a check. They're still going to get the check. It's just they're slow. So it's not like you're not getting, even if it takes a long time. Unfortunately, that's just the process it takes. So you'll get the check eventually. It's not a quick process, but you're going to get that money back, which is nice to know. So we average, just in our firm, about $10,000 to $30,000 per open tax year for our clients that use us. So that's $10,000 coming back into their pocket. That's $30,000 coming back in their pocket, tax-free. It's money they shouldn't have paid in taxes that is now in their bank account to use for expanding the business, to use for going on vacation, to use for hiring new employees, to use to invest. Like it's their choice, it's their money. So it's a really cool thing that we're getting for the business owner.
Yeah, and a question I'm pretty sure our followers would be wondering is, and I know it's pretty broad, but what are some of the industries that you have seen in your experience that tend to qualify for a credit like this?
Yeah. because we've talked about that pretty much any business can qualify, but there are businesses that qualify because they're more often, and it's because their day-to-day behaviors are just qualifying events. Like what they're doing by just showing up to work is a qualifying event pretty much. So those industries are medical. So that's anyone from the dentist to the doctor to the chiropractor to even like a veterinarian, like anyone doing it in the medical side of things. Their practices typically qualify. Anyone in construction, and again, it's going to be a broad range of construction. It's not just the general. It could be the subs and the plumbers, the electricians, the framers, the people that pour concrete have the potential as well. So like huge brand of people in construction. Anyone that manufactures a product or designs a product and has another firm manufacture it. So don't just think because you don't manufacture it yourself, just you designing the product still counts because you're still having to pay for that manufacturing, and the paying for manufacturing counts towards the credit. Anyone like agriculture or like natural things like soil-based or like environmental stuff. Anyone in blank franchises. So if like you own a franchise, like just an example, some franchises we've helped Chick-fil-A or Massage Envy, or we've done some waxing salons. So those you wouldn't typically think, oh, that doesn't sound like R&D stuff. But it works because they're a franchise. The franchisee, the corporate, does a lot of stuff in behalf of their clients that trickles down to them. And then engineering or design, those industries are solid industries to look into. If you are in that industry and you have no idea what I'm talking about, there's a really, really high chance you've overpaid in taxes because you should be and should have used this credit and you haven't. So.
Yeah, well, thank you so much. So Justin, on top of offering, I believe you offer like a kind of a free consultation or a free evaluation of a client. You have prepared to offer an ebook called Demystifying Tax Incentives for the audience if they are interested. Be sure to post tax credit below if you would like to receive a copy of this ebook. Justin, can you tell us a little bit about this ebook?
Yeah, this ebook is really just a short, brief introduction into what is the history of this credit, how does it work, why has my CPA never told me about this, and then what's the process for claiming it. So basically a word version of what we just described, but it'll answer some questions people have. It'll explain a few things. Then there's some questions, common concerns that we get from people like, does this cause an audit? The answer to that is in there. There's like just different variety of things that just a very simple, quick read. It's only 17 pages. It's not like tax lingo. It's very understandable for the small business owner because that's who it's written to. Is it just provides you with the information like this is something you need to be doing and how do you act on it? Like what can I do to make this a part of my business?
That's great. I would like to thank Justin for taking time out of his busy schedule, coming on the show and sharing his expertise. Be sure to post any questions or comments below. Let us know if there's a topic you would like to have discussed on the show. Be sure to comment below or email educatingyourmoney@gmail.com. If you are interested in receiving Demystifying Tax Incentives ebook, be sure to post #tax credit below. Justin, if our followers have any specific questions or wanted to discuss more with you, how can they reach you?
One of the best ways is just to, number one, visit our website, and then there's a contact me information. Our website is sbincentiveconsultants.com, or they can even call me. Like I'm completely fine taking phone calls. So that number is 801-882-1377. And I will be more than happy to just speak with you, even if it's just a brief question. Then you might think it's stupid, but there is no stupid question. So don't feel like I'll try and answer it, even if it doesn't have anything to do with tax. So you're more than welcome to reach out to me those ways. Those are the best two ways to get in contact with me.
You'll probably get a flood of calls because I'm sure most people aren't going to didn't know about this. So I'm glad we're able to get the information out so even the small business owners can take advantage of tax incentives that they had not known about before.
Yeah, and I just really encourage you, just do the free evaluation so you can have the assurance, like even if you don't qualify, at least you know that you haven't overpaid your taxes in this specific way. So I think that's a great opportunity. So no obligation, do it.
Yeah, definitely. Thanks for watching Educating Your Money podcast, where it's not just about making money, but about educating your money. See you next Wednesday for the next episode. Thank you and be safe, everyone.